AI stocks, clean energy and data center stocks have been absolutely crushing it in 2025, and for good reason. It's well documented that there is an extreme shortage of supply and power supply. This is why we've seen stocks like Applied Digital gain more than 230% in the past year, and their recent $11 billion deal with CoreWeave highlights the importance and the demand. So in today's video, I have an exciting penny stock trading at just $1.70 that is suddenly attracting a lot of interest, and a Simply Wall Street analysis recently gave this company a fair value of over $30 per share Canadian, making it undervalued by as much as 93%. Today I will be talking about Westbridge Renewable Energy. This stock is traded on the OTC, ticker symbol WEGYD. Now before we get into it, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Westbridge Renewable Energy Corp is a capital-light solar and battery energy storage system developer who have now entered the data center space with a huge new project that I will talk about in a moment. The stock is listed on the Canadian TSXV exchange, ticker symbol WEB, the OTCQX, ticker WEGYD, and the Frankfurt Stock Exchange in Germany. This is a global company with a portfolio of projects in 4 key jurisdictions: Canada, the US, the UK, and Italy. Westbridge delivers attractive long-term returns by originating, developing, an international portfolio of renewable energy assets to support increasing demand for energy and grid reliability. They are positioned to capitalize on the global surge in clean energy demand, particularly in Canada and the US, where massive energy needs from AI data centers and tech firms are driving unprecedented growth. Now, I want to get straight into some news here before looking at the investor's presentation, because for me, this could be one of the most exciting pieces of news that I've seen from a real microcap penny stock in a very long time. Westbridge Renewable Energy announces the launch of a first data center project, Fontas, a 380 megawatt strategic hub in Colorado. The 380 megawatt data center campus marks Westbridge's strategic entry into digital infrastructure, underscoring its commitment to building sustainable, high-performance assets in high-demand markets. So first of all, just think about this for a moment. This is a company with a market cap right now of about $40 million, building a 380 megawatt capacity data center. For context, Applied Digital just signed a deal this summer with CoreWeave valued at $11 billion for capacity of 400 megawatts, and with this, the stock has ran up about 400%, with Applied Digital now worth $5 billion. So there is a lot of similarities between Westbridge's Fontas project and Applied Digital's Polaris Forge 1 project. Westbridge CEO Stefano Romanin stated that Fontas represents a bold step forward for Westbridge as we leverage our core strengths to enter the high-growth digital infrastructure market. This is a natural extension of our renewable energy platform, and we're excited to bring clean, scalable computing capacity to one of the most dynamic markets in the US. Fontas is now progressing through approvals, so keep the stock on your watch list for updates to this. Looking at the most recent investors presentation, we can see that this stock was listed on the Venture 50 and the Best 50 OTCQX lists. Westbridge is a fast-growing solar developer focused on delivering exceptional return on capital investment. And this offers a unique investment opportunity. They are the leaders in utility-scale solar sector on the TSXV, with a high-quality portfolio in excess of 10 gigawatts. But as we said already, they are industry experts with a proven track record. There's over 40 projects developed with capacity in excess of 2 gigawatts, market expertise across Europe, the UK, and Canada, and they have outperformed competitors with average money multiple of over 5x. But this bit is important. They are highly cash generative, providing non-dilutive cash for portfolio investment and shareholder distributions, which I'll look a little bit more at in a moment, because they sold the first two projects originated in Alberta for $89 million proceeds, with a further $50 million in future milestone payments for these projects. We can see their key highlights here. They have a portfolio of 10 gigawatts across 24 projects in 4 countries. Their track record is exceptional. They sold projects for $89 million, and they target 5 to 10x return on capital investment. And they have 3 Alberta Utility Commission approvals in place for Georgetown, Sunnyshook, and Dulce projects. While on the financial side, they boost strong growth with 33x portfolio growth, $28 million in cash, and 0 debt. And they have a history of giving back to shareholders. In 2024, they performed a 5% share buyback and also returned capital through a dividend. Now, we already know that demand of clean power is surging, with solar and wind and nuclear set to fill the gap as the world moves away from fossil fuels like coal. The Westbridge model is very simple and effective, targeting a 5x return on capital investment over a short 2 to 5 year development timeline. There are 3 main phases, and Westbridge is the only publicly traded North American renewable energy company focusing exclusively on phase 1. This is the low risk, very high return on capital investment segment. So here's a list of the completed and late stage projects. They have over 2 gigawatt capacity at the late stage portfolio and are well diversified across late, mid, and early stage projects. The Sunnyshook and Georgetown projects have already been sold for a combined $83 million with additional milestone payments, and we see a much better breakdown of these here, with $50 million in additional milestone payments to come, demonstrating 5 to 10x return on investment with 0 dilution. And the project breakdown for both Georgetown and Sunnyshook can be seen here, showing both the exceptional returns to date and future potential payments. For anyone that's interested in this company, I recommend taking a look at the investors presentation on their website. I'm not covering the whole thing here in detail, but this is a very interesting read. There's a lot of valuable information. There's also a list of mid-stage projects and their standalone BESS projects. So it's clear to see that this is a very busy company. They have a lot of projects ongoing at different stages of development. While this is always good to see, there is a large amount of insider ownership at the company, which is about 40%, meaning that management are aligned with shareholders, while high net worth individuals and retail investors own about 30%. And there is a good breakdown here of just why Westbridge Renewables offers such a good investment opportunity. They have a proven track record, as we've already seen with Georgetown and Sunnyshook projects, but they also have a strong pipeline for the next few years. And I want to take a look at the latest financials too, because this is important. In May, Westbridge reported strong financial results for 2024 and strategic updates on its pipeline. And we can see here, they had $99 million in gross cash proceeds from the project sales, resulting in $60 million profit before tax, $35 million in debt repaid, bringing the long-term debt to 0, $10 million returned to shareholders via return of capital, and $37 million in cash and cash equivalents to drive future growth. And they also gave updates on the Alberta projects and an update on their expansion portfolio into Ontario. But looking a little bit closer here at the numbers, as at May 31st, they had total assets of $52.9 million and total liabilities of just $3.9 million, meaning that the equity value of the company was over $49 million, so this is a very strong balance sheet. And we can see that they have cash and cash equivalents of $32 million. Now, these figures are all in Canadian dollars, but remember that the market cap of this company is just about $40 million. Now, with this being a Canadian microcap company, there is no Wall Street analyst price targets available. But if we look at simply Wall Street, they have done a breakdown of the company, with Westbridge comparing very favorable in comparisons to its peer group, and they have assigned the company a fair value of over $30 per share. So with the current price being $2.15 Canadian, this means that the stock is 93% undervalued. This stock would need to 15x its price to reach its fair value. But guys, what do you think? Let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe, and I'll catch you in